Hi guys, I just want to chat quickly about how to identify a breakout. So a breakout is when you have a particular support and resistance level which has been significantly broken, and we can use that as a reason to enter a trade. So there's a couple of different parts to the breakout. So the first thing, which is very, very important, is the candlestick itself. I've got a couple of vertical lines here with just examples very quickly. So basically you've got a big bullish candle here. See this line here? You've got a big bullish candle, and it's obviously broken through this horizontal level, and it's closed above that horizontal level. So what you're going to notice with these breakout candles is, compared to all the previous candles, you can see this candlestick is actually quite a large candlestick. And as I say, it's closed definitely above that resistance line, the dotted line there, the Forex velocity support and resistance. And it's got hardly any wick. So that's always a good indication that the market is going to push up. It means it hasn't, in that time period, it hasn't actually retraced back or anything like that. So it's a big push up. So that's the first thing that you look at. So it's the candlestick itself. It's normally got a big white body if it's a bullish break. Yeah, big white body, and then very small wicks. So that's the first thing you're going to look at. And it's significantly broken above that horizontal level. There's no doubt about that. It's a very distinctive candlestick when you look and compare it to all the previous candlesticks. The next thing, which also just helps with your probability, is have a look at the Bollinger Band here. You can see not only has it broken that resistance level, but it's also broken the Bollinger Band level, and it's closed outside the upper Bollinger. So, remember, with these Bollinger Bands, they act as a kind of a dynamic support and resistance. So you almost expect it to come and just bounce down from that point. You can see it actually broke that level there, the outer band. Next thing you can also have a look at is the stochastic. So with the stochastic, I look at the stochastic fast. And when I'm doing a bullish breakout, then I also want the stochastic to be above the 50 level. So you can do that either by putting a 50 line on your stochastic, or you can just put your mouse next to it, just to the right of where it is. And you should see, you can see there on my screen, the stochastic value is 55. So that is above 50, so that's absolutely fine. Obviously, when you're doing a bullish breakout, you want to be, really in an upward trend. And then obviously when you're doing a bearish breakouts, then you want to be in a downward trend. So there's an example, there's one example there. So you could enter trades, buy trades at the close of that candlestick and trade that up. The next one I can see here, this candlestick here, again, you've had all these kind of small candlesticks. There's a big level of resistance there. All of a sudden you get this bullish candle that comes up. It's got a very small wick at the end. That candlestick is a lot bigger than all these previous candlesticks. It's also broken up through the outer Bollinger Band. So we could also enter a trade at the close of that candlestick there. Depending on what you see on the higher time frames, support and resistance and all that kind of stuff will depend on your target. For your stop loss, you could do a stop loss just at the low of that candlestick there. You can maybe just, even if you're in doubt, you can just do a 1-to-1. So they normally work very well. Okay, so what you don't want to see, here's just an example of what not to look out for, or what not to do, if you like. So you'll see, okay, you see this candlestick here, it's actually closed below this level of support. But have a look at the length of the candlestick. It's a very small candlestick, so it's not distinctive enough to really warrant entering a trade on. So yes, it did actually go down, but for me, that wasn't a very distinctive candlestick. So you want, if it was a candlestick like this candlestick, then that's a different story. But when you see a small candlestick like that, even if it broke it and closed down, it barely got below that level of support. So the probability isn't as high. As opposed to if we go to the next one, you'll see this, this is a big bearish candlestick here, but it didn't close below that level of support. But the next one, however, was a big bearish candlestick. And you can see not only did it close below here, but it closed below this level of support here, quite significantly. There was no long wicks or anything, so it signified that there was no retracement. Sorry, just excuse my dog there. She doesn't know that I'm doing the video, clearly. Hopefully you guys can hear over all the barking. Okay, so it broke down to that. You can also see Bollinger Bands was below the outside of the Bollinger Bands. And then the stochastic was obviously way past the 50. You can have that would be your entry points. Stop loss would be above the candlestick. And then you could have got a 2-to-1 out of that, or depending, you could have got a 1-to-1 depending on where you put your take profit. But yeah, so guys, I hope that kind of gives you an idea of how to trade the breakouts. Just, make sure not only does the level get broken, but that you see a significant candlestick, like a candlestick which is longer than most of the rest of them. Make sure that it breaks the Bollinger Bands, and then make sure that the stochastic is either below the 50 if you're selling, or above the 50 if you're buying. If you guys need any help or have any questions on that, then you can either email me, or you can log on to the chat room, or call into the office, and then we're here to help. I hope that helps, guys.